Howdy ho, keen traders. It has been a dull day. We were taken out of our Aussie USD trade from last night, and that was just a typical of what happens in these slow markets. We're just getting stop runs on either end of the side. We'll look at this. I spoke about it briefly on Twitter, but let's just take a look at the Euro USD. We'll see exactly what I'm talking about. If you see on this pair, we'll go down to, let's say, a 15-minute chart. You can see the last couple days it's basically just gone to both sides, just knocking everybody out. I think it knocked us out of our initial trade. We had our stops right to start the week at 137.68. You had the spike higher. Let's see what day we have here. Yeah, you had the spike higher, took us out of our stops, and then drifting around there. And then it went down and just simply knocked out all the people that were shooting for a trade higher, just knocking out their stops there on short terms. So basically, we're just having a chop. I mean, this is a real considerable chop zone. If we look on a 4-hour chart, it'll probably seem a bit more obvious. You can see we're just drifting sideways, and it's. I'm not going to jump into this. I'm not going to get knocked out again. It's been pretty poor happenstance trading for the last 3 months, and basically in all these. Well, actually, since we had this spike down to start in the middle of November, you can see that it's just been very difficult to trade these pairs in their current for stacker setups and so forth. Just because, actually, right here it was right in the beginning of November, this long wick kind of threw everything askew, and we see with this it did finish 50 back. Blah blah blah. We've gone through all this before, and then just whenever you seem to get momentum to the top side, we had a sharp move lower, except for this last run up, which you didn't even actually get a 50 fib entry there. So what we're doing here right now is a bunch of nothing here right at the top of this zone, and the pair is waiting once again for the FOMC news. And what I'm going to guess that the FOMC news is going to be no news. And with this no news announcement, we're going to see that the crosses are going to continue to drift a bit because of the holidays, and then notoriously probably the slowest week of the year is between Christmas and New Year's. But that doesn't mean a trend doesn't start during that time period. Quite often people are like, when does momentum come back? When is momentum going to come back in the market, come into market? And it'll be sometime in January, beginning of January, second week of January, but at that point, the pairs have moved in a very slow and shallow trade range. So what I'm going to be looking for, and this is a trade I could most definitely see myself logging into, is going into this slow period after the news tomorrow, jumping back into our Euro USD trade, which is right here. So 138.30 would be our stop, a little bit above that. Just looking for a drift back down lower, and just let that ride. And over the holiday period there, and maybe we'll get a little bit of momentum to the downside to keep things going, and we're only going to be risking depending where we shoot out here. But I mean, you can see the pairs at 137.69. Where was our stop? 137.68. So we could technically still definitely be in our initial trade from 138. 138. You can see that the pair and still just risking 30 pips, but you can see that the pair has, well, actually our stop was at 138.50, has done much of nothing right now. But we'll have to see, like I've said before, not doing anything before FOMC tomorrow, and then just jumping into longer term trades when we try to get a little momentum. But we could also see after the FOMC, if we get nothing, we could see a push higher, and with this push higher, the trend could continue to see a push up towards, I don't even know, I don't have a level. I mean, we could see a push up towards I don't remember why this fib level's here, so I'm not going to throw that fib level out. Oh, it's the 50 fib from that move down to there. That actually is a pretty good target on this retention pullback, on the pullback, the 50 fib bounce, and then the target could be up around that 139.18 level. We'll have to see. So right now, right here, we're going to watch this, and we're going to look for something to jump into with the FOMC. The next pair we're going to look at is the Great Britain USD. Great Britain USD, you can see bounced like clockwork at this 162.50 level, 162.30 level. I think I was more so looking for a bounce at the top of the range, which looked like we had that yesterday. So there's just chop going on in here. Let's jump down to a 4-hour chart. So actually, let's jump down to a 5-day 1-hour chart to get a better idea of what we have going on in this zone. And you can see, yeah, just a rejection at the top, but that was pretty nice. But I mean, these aren't huge moves. You can see, whoa, so you get into there at 163.22, put your stop there, and I mean, the furthest it went down was 30 pips, so it's almost not even worth the hassle. And then you see you get another pushback down. You can see, I mean, basically this is an 80 pip range that the pair is just camping out in ahead of the announcement. So there's really nothing to do with that cross right now. And the Aussie's a bit interesting because we tried to go into this pair. I guess let's get to a shorter term. The setup today was a what's a one-on-one, and actually this isn't the chart that has it on it. Let's see, template. Let's get rid of this template. Remove. I have no idea which one. Let's say the 16th. Yeah. I can explain this trade to you guys in a bit. What we're basically looking for is just, as you can see, that the pair moved up and then it retreated back to the 0.786, bounced back up just a little bit, almost to return to the same exact level, then bounced back down and reversed at the 0.68. And what we were looking for is the actually this way, and then what we were looking for is a reversal right here in this this zone around the this zone here around the 89. Actually, the real entry level was 89.25, and then the stop could have been even as short as 89.20 if we wanted to. But then the pair started moving back, and it kind of drifted into another formation of, I think it was a butterfly in the hourly. And I was looking to see if because we was all in the same zone. That's what I liked about it. There was a few indicators all clustered in one spot, so there was a definite chance that buyers were going to come in there. We didn't get that. Shot down. Bam. Pulled out, and now we're about back where we almost initially hit the trigger. So what we have on a larger scale, though, on this pair is you can see the same trade is still pretty much in effect from early in the week, or last week, where we were looking for a bounce on the daily, but now it's a butterfly in effect. And what we're going to look for is not a bounce here, not a bounce here, not a bounce. We're going to look for a pair push down to this 88.50 level, and maybe even a little bit below, towards maybe the 87.50 level, because then we have a nice butterfly setup, which we will look for a bounce back up higher from that point. And it's nice daily setup, and if we get that combined with the euro, those could be nice trades to carry in through the holiday season. I'll put a chart up on this once I get done with this, and we'll look for that to carry us over. And another share that we have to obviously keep our eye on is this trade. This trade is still, still jello. The one we did before at 103.30 last week, because we're not getting any action. These trades are all still valid. There's not much to say or do. You could see we could still get in, put our stops above 103.72. So if we're comfortable taking over 100 pip stop there, well, we'll see where that is tomorrow, or by the end of the week. We could definitely jump into all three of these trades and ride them for larger moves. And that would be the type of moves that we just keep going, and we'd maybe move things to break even. But there's no reason to try to scalp in this kind of market, because the edge is gone. You don't have it. New Zealand USD, you can see that the pair is still in this range, as we spoke of, bouncing back and forward, and we'll look for a break of that in the future. Great Britain JPY, that's actually a pretty nice move there today. And the Euro JPY. Let's check out the scalps anyways. Layout, there we go. Great Britain, New Zealand is still in this range. This I don't even know if I can call this a triangle anymore. I think we might just have a slowly gradual moving downward channel here. If you're comfortable moving down 10 pips a day, that's the pair for you. Great Britain odd, if we look on the 15 minutes, it's just kind of in a narrowing range also. You can see that this pair bounced up basically at the top of this broader range. So basically we have a range between 83, 81, 60 in that pair, and there's really nothing to do right there in that time frame there. So, well, actually I guess we say the top of it was at 83.50 and 81.60. Until we get out of that, there's really nothing we can do. And in the Euro pairs, I know I have a more recent one, but it really doesn't matter. Nice break out of there today. It seems like a huge move, but that's only 100 pips in the Euro JPY. And in the Great Britain JPY, it's the exact replica, so that shows us that the yen pairs are ruling the price action there in the short term. So what we're going to keep a lookout look out for heading into FOMC tomorrow is the bigger plays that I just spoke to you about. We're going to look for setups to get into the larger trend and the larger trade, and our focus is going to be on the USD JPY, the Aussie USD for maybe a push down high lower, and the Euro USD. And we're also going to watch the Great Britain USD for a push up towards the top of this range, where we could see a opportunity to see a short back down and for a little bit of momentum into the end of the year. All right, that's it for now, everybody. Have a good one. This is and I won't be doing any trading until FOMC. Might say some stuff early in the morning, but I will be back for the FOMC around 2. Taking care of some over this time period. Most of the year I take care of all the other business I have to take. Look, I have a few rental properties and so forth. Take a lot of time on your hands. All right, everybody. See you in the AM.